Yo guys, welcome back. I'm Tom Crown, and you guys are the best viewers on YouTube. Good to have you. We have another spicy day of trading. We're going to do a little run through as we did yesterday. Start with some news, quickly run through some macro charts going on in the markets abroad. Then we're going to get into Bitcoin, Ethereum, Ripple, Doge, ADA, Sol. I added a few extras. We'll check up on Sand again, EOS, ICP, and BRISE. Why are we looking at these? I don't honestly really own or know most of the new ones I just added from yesterday, but they're trending. So people want to watch them. People want to see what they are, I guess, on Google Analytics. So hope you enjoy. While you're here, don't forget to smash the like button today. If we get 420 likes, I'm going to try. YouTube has enabled a new, it's like Twitch where you can gift memberships. I'm going to try that out if we get 420 likes. So smash those likes and subscribes if you haven't yet. It really helps the stream gain momentum. You'll see if you start hitting the likes, if you start chatting in the live stream, voting, more people will come. So it's good to see you guys. I see Ryan, David, Vanessa, lovely Vanessa, George, Yanni, Elmer, Justin, Alchemist, Tyler, Denham, Moonboy, I like that name. Alchemist, I think I got you, but I always do you twice. Stuart Anderson, Shaba, George. We got a lot of people. If you're here, put something in chat, get it hyping. Let's jump into today's biggest gainers. We might have to add something to our list. So yesterday we saw Sand actually with the highest percent gain in the 24-hour period. We have that again. Oh, Sand. Did I say Sand? I meant Thor. Man, this you can barely see this. Well, Thor, not Sand. Sand is in number 2 with 14%. But this is the second day in a row that Rune has been in the number 1 24-hour gain spot. I still don't see a breakout on this little preview 7-day chart, but we will probably end up looking at Rune just because that's 2 days in a row now. It looks like it's showing some strength. Biggest losers. EVMOS, or whatever that is still the biggest 24-hour loser. T-Fuel, actually, this looks exactly as it did yesterday. I'm going to refresh this, make sure this isn't old data. Doesn't look like it's old data. Forget everything I just said. For some reason, that did not refresh. Psyched. Gotcha. It was just a prank. It looks like basic attention token up 8%. That we could take a look at. That's solid. Step in the 9% zone. ENJ, Celsius Network, and a bunch of other stuff. eCash, stuff I haven't heard of. Atom down there, 3%. Biggest gain or biggest losers looks like Synthetics Network. My baby Litecoin down 6%. No good. Tezos, Polkadot, Decentraland, and Bitcoin Cash. Oh, that threw me through a loop. Why was that not updated? I've never seen that happen. Oh well. Is what it is. Shout out to our sponsors. We are sponsored by Femex and Market Cypher. Check out their links in the video description below. You'll get perks for using my links and helps the channel. So I kind of went through the news and hopefully the news refreshed. Or else I'm looking at yesterday's news. Let me just really quickly refresh, make sure there's nothing new here. Celsius making payments towards their loans. Great. Let me know when I can withdraw. That's pretty much how I feel about the Celsius situation until I can withdraw. I want to make sure this is actually live because for some reason it says waiting on my side. We'll cut this out in the post. We're good. We're live. Awesome. Oh, yeah. Until I can withdraw, I don't care what Celsius does. Cool. They're making loan repayments. Awesome. I want them to be able to enable withdrawals and let people get their assets back. I have thousands of dollars stuck on there, but I'm not going to get hyped up about anything until I can withdraw. So for now, ignoring that. Inside summer, crypto hackers, of course, crypto hackers. Ooh, millennials enthusiastic about crypto as the majority say stock market investing is too risky. I like that. I feel that way as well. Way too risky. Yeah, this news did refresh. So I'm going to pull up the things I thought were important. The euro, I think this is today, drops to a 20-year low against the dollar. Yep, that's lower than it was at almost in parity of 1-to-1. The euro was trading for I would say many years at about 1.2. That's a big loss. Let's pull up the Euro USD chart here really quick and just take a look at the damage that they're talking about here in the article. And it is apparent. I'm going to get rid of a bunch of this, but that is apparent to holy crap. Look at that. We were hoping maybe the euro would see some kind of retracement to the upside, maybe fall back down, but not the case. Euro tapped 1.03 support, made a move to 1.7, tapped support again, made a lower high, and now broke. So what might we look for as traders? while this isn't a perfect head and shoulders, we do have 2 taps to the same number. That'll be a potential neckline, and we could draw this pattern out like this. So we may expect the euro possibly to drop a little more, but to play out as a head and shoulders, and this is the daily time frame, we would expect the euro then to return after breaking support to 1.035. A rejection there could put the euro under 1-to-1. That would be crazy times with Jerome Powell coming on. I believe it's the 15th. I still need to triple check that. We'll be here live. Watch for the scheduled stream. With rate hikes coming, this could be ugly. We could see this head and shoulders play out on the euro with a measured move, I'm sure, somewhere that no one's going to be comfortable with. Looking about one flat. That's a 2% decrease-ish. Possibly 89 cents. I'm thinking 1-to-1. It's going to be a psychological value. Just 1-to-1. It's easy for people to calculate in their heads. People like ease. So let's just put the 1 here on the chart. It's not support. It's not resistance. It's just a number. We'll see how that plays out. If we see a bounce from that 1, I may look to take a short at 1.035, simply to play that inverse head and shoulders pattern, obviously using the right shoulder as my stop. Just a classic play. By the way, nothing I say during this live stream, no matter what you believe, is financial advice. I'm simply telling you what I'm feeling, what I'm seeing as someone who loves charts. I'm not right all the time. I get it wrong a lot. I'm going to show you our live trades once we get through. We only have like one more kind of thing I want to look at anyway. CoinLoan reduces withdrawal limits, but claims no exposure to Luna Celsius 3 Arrows Capital. Now, this is another one. It's kind of similar to this Celsius situation we're in. Great. Awesome. I'm glad that like you don't have exposure to these things, but you were just reduced withdrawal limits. You basically are saying, no, you can't get your assets out. I'm just going to take the time today to say this again. I've been saying it every stream. Get your assets off exchange. Bring them into your own wallet. Crypto is about custody. And when you have your assets on centralized exchange, you have no custody and you essentially lose the value that is crypto. So this is just another warning. I don't know what CoinLoan is. I don't really care. But we are seeing this. The risk of other platforms becoming insolvent is getting higher. The more that collapse, they're dragging the others down with them with bad debts, with bad bets. That rhymes. Just be careful. I have a little bit on exchange to trade live. It's less than 1% of my portfolio. I have 95+% of my crypto in my wallet right now. When the market calms down, when things are a little more calm, we see some regulation, or we see at least confidence return to the market, I will then likely put some of my assets back on exchange to trade and hopefully to get some lending yield again. It was sweet. It was sweet, but it's not worth the risk of just getting completely, essentially liquidated if you can't get your assets out. All the interest in the world's irrelevant if you can't keep it. This is the final piece of news. There wasn't a lot of actually really spicy news today, but I found these ones important and thematic. So the last one, world's largest Bitcoin miner sells 79% of its Bitcoin holdings. What does this mean for the crypto market? The reason I wanted to bring this one up is because it reminds me of the last bear market. There was a weird sentiment where people were kind of viewing miners as the enemy. And this title is very much insightful of that old rhetoric or that old mindset of the biggest miner selling 80% of his Bitcoin. Oh no, calm down, take a breath. This is how it works. This is how it works. Miners mine Bitcoin and then they sell them on the open market. It helps with decentralization as it spreads the supply out. But two, what it really is miners are a business and they must produce profit or they go out of business. They need to cover their overhead. Mining takes an extremely large amount of electricity and an extremely large amount of hardware. Very expensive, lots of overhead. I don't know the exact numbers, but this 79%, that could just be the normal percent they sell. That might imply a 21% profit margin. When you see these articles, and I have a feeling we're going to see more and more, just kind of dismiss them. Miners are not the enemy of the network. The miners are the heart. They're the lifeblood of the network. They're the reason the network is secure. They're going to always be selling to some degree. They have to recoup their costs. But I'm not going to even read into this. Just know and trust that miners want the price to go up because that makes them more profitable. That's the idea. Cool. So let's get to the charts. Today, we were watching this yesterday. And today we got movement, likely affecting markets globally. What's happening right now? The dollar rocketing to 106.6. We looked at this potential, I'd say this is a rising wedge. This is pretty rising wedge-ish. However, uncharacteristic of a rising wedge, we see a breakout. We had a high, a low, a higher high, a higher low, and now we have a breakout. This is not a comfortable spot to be in for crypto. Likely the reason your portfolio looks extra bad today, if you've looked at it, I haven't looked at mine basically all year. I'll look at it next year. Not good for markets abroad. However, we've kind of been expecting this. This isn't a surprise. Our sights have been set at 108-ish for a long time. Honestly, ever since we closed over 103 back here in May, early May, we've been looking for 108. This is the logical resolution to what's happening. It really does take a while. You have to zoom out. Even the weekly chart, not quite big enough to look at this. This is the dollar. There's lots of history. When we zoom out to the monthly, trading view. Stop it. Okay, when we zoom out to the monthly, we can see that's a pretty impressive candle. But if you look at the, this is from 1968 all the way back to 67, nearly 60 years of history. There's a pretty, it's consistent here. We've had highs. We've seen the dollar be very strong. Looks like back in 85, 2001, and I guess again we could say maybe 2016, but really more so now. This is like a 20 plus year high for the dollar, broken again. It hasn't really gone anywhere. The dollar has these big moments of strength and they collapse. Look at this V-shaped top back here in the 80s and 85. I really want to move this up so you can see that a little better. There we go. A reversal here from 120. And so we're looking for about 108. We could use our more simple TA and say, actually, maybe we're looking for 121. Maybe we're looking to retest that previous high. That is possible, especially and also even probable if the Fed continues on this hawkish rate hike path. If they start increasing 100 BPS or continue the 75, 121, not out of the question. I don't really believe the dollar will go much higher. And if it does, it almost certainly will collapse. It has already been parabolic since the start. Looks like since June of 21, it's been absolutely parabolic. Again, this is the monthly time frame. We're looking at a lot of history here. This is only up. This is what we were promised with Bitcoin. We got rugged. There are no promises. There's no promises. But the dollar is beasting. This is putting selling pressure on the rest of the market. As dollars increase in purchasing power, they're able to buy more of any good or asset. And so the value of that asset in dollars goes down. Very, very simple, fundamental kind of exchange between that pair. Not seeing the weakness we'd like yet. I think 108's in the cards. We'll see what happens then. However, I will say it is very unusual. Probability would say the break to the upside is not the move we would expect on this ascending wedge. So what we could see, we have 5 hours left. We could see this sell back off. If it can wick back below 106.23, it may end up still being trapped in this ascending wedge. And then we would probably look for the downside target, whether it's 103 again, that would test it as support one more time, weakening the support, or falling all the way back to 100 for a deeper retrace. When we see the dollar lose strength, and clearly that is not right now in this moment, clearly in this moment today, that is not the case. But markets change very quickly. That could be the case soon. Who knows? But when it does, we will pretty much expect to see everything else do the reverse. Everything takes less dollars to buy because dollars have more purchasing power. When the dollar loses purchasing power, it takes more dollars to buy each thing. And then so logically it increases in its dollar value. So watch for the dollar to lose strength. That isn't happening yet. A close just slightly below here could put it back in that rising wedge, which could lead to a deep fall. Back down to the hundreds, potentially lower. I really believe it's just going to come down to what the Fed does, if they remain hawkish or not. So that gives us the macro background. Today, just looking at this chart, we can pretty much expect to see blood in the markets, period. Okay. Good warm up. Whoa, good warm up. I'm going to show you guys my trades that are open right now. While we do this, please smash the like buttons, guys. If we get 420 likes, wow, we got a lot of viewers again. If we get 420 likes today, I'm going to gift out a bunch of memberships. It's a new thing on YouTube. It's like Twitch where you can like gift out random memberships, I guess. I've never done it. I've never seen it done. So let's get 420 likes and we'll get some people, some green names joining the Crown fam. Let's catch up on our trade. So since our last trade, here are our fills. Or since yesterday, here are our fills. Let me see. The 4th. Scroll this down weird. There we go. There we go. These are the trades that I've filled. Basically, if you don't want to look at this, you can pause it. Look at what happened. We were in a short yesterday. I believe while we were live, I moved the stop. I'll have to think. But essentially what we were doing is we were looking to stop that short and reopen higher. It did work out. We didn't get as filled as I would like to have gotten filled, but we stopped our short at just over 20,100 and we were looking to start reopening at 20,400. And you can see right here, we got a fill. We got a fill 20,400 and we actually already took some profit on that short. Took 10 contracts back at 19,444. So let's zoom in and see kind of how that played out. How did that play out since here? This was kind of the price action we were watching. This is very boring and sideways. Price moved to our stop loss. I actually moved the stop loss to about the same price again. We moved our stop loss to 20,100 and we looked to reopen at 20,400. That's exactly what we did. Price did not significantly break through. I was hoping that we'd get maybe a wick high, maybe even if it's just briefly, to 20,800. I was going to look to double this position at that point. It did not come. Price fell back down. Let's check 19.4. Right around here, we closed a little bit of that short. Price has gone back up. Our trade, this isn't the biggest, most aggressive trade, nor should it be in this moment. The world is very volatile. Bitcoin is at its lows. We haven't seen like a capitulation. Using high leverage and not using a stop especially, very risky here. Know your risks always. I love Femex. I love trading on Femex. I like leverage now. I didn't used to like it, but I still believe it's an incredibly powerful tool that should be used as a tool, but it has extreme risks and potentially can leave you losing all your assets that are on that exchange. So be careful and know your risks. Please, guys, there's nothing wrong with spot. I've traded for like 6 years. I would say 99% of my trades have been spot. I mostly do leverage for you guys because it's interesting. I do maybe one real leverage position a year, possibly two. So at the moment, nothing's really changing about our trade. Basically, if it reaches 20,001 again, we're going to look probably to stop out of this short in profit. We already took a little profit, but what we're really hoping for is to see this price move down a little bit more, possibly to 19.1, fill a little bit more of our long or take a little more profit. And you can see we've layered those down. And I'm looking for potentially a big one at 17.2 if we see maybe a flash crash or something. On the other side at 22,400, we're going to get into this as soon as we jump into Bitcoin. That's where I'm looking to take a big short. I hopefully will lose money on this big short because that is a very important value that we are about to jump into. So I hope you guys are enjoying this new format. I like it because I made like a list of things I'm going to talk about so I get through them. I don't forget about them. So Bitcoin, we're going to start with nothing drawn on this chart. Well, that spoiled it. Spoiled, ruined, stop the stream. So 22,400, I was just talking about as my big short. We said this yesterday, but to rehash, that's where the 200 weekly moving average is. That is a significant and historical price point for Bitcoin that has typically marked bottoms. In the past, and actually no, in the past, it has marked swing low bottoms every single time. That's accurate. It has. This may be, as it is the cycle of firsts, the first time it doesn't. So what are we looking at? We're looking at least a back test of the 200 weekly. That's at 22,500. That's where I'm looking to open my heavy short. You can also see price consolidated there on the daily before dropping lower. So we have a horizontal resistance and we have this major moving average, likely to see some kind of selling here. If price is able to just pop through the 200 on an approach, we might get back in kind of bullish status much sooner than we would, much sooner than anticipated. But at the moment, that's really not something I'm worried about. I'm looking to hedge short here. If price does go all the way back up, then great. I lose that short, but my portfolio then regains much more value than I lost. Let's zoom this out. This isn't the entire history of Bitcoin, but you can see this is all but 2 tests to the 200 weekly we've ever seen. There's 2 more back here in 2015. We are just slightly underneath it, consolidating. We've closed a weekly and a monthly below it, so we need to get this level back. We cannot be trending up without getting this level back, period. Not the thing you wanted to hear, but life goes on, right? Let's see, zooming in. Didn't mean that. We have on today, we took our short right at our daily resistance there at 2,400. Easy play. What I missed is I actually didn't update these trades after yesterday's close. Had I looked at this, I probably would have actually moved that longer, that take profit down to about 19.3. That was yesterday's open on the daily candle. This just, I don't even know if this is TA. It's just something I've observed in crypto is very often when you have something like this large green bodied candle that kind of erupts out of nowhere, feels different. If you look back at the last like 10 candles, it is different. What I've noticed is a lot of the time you'll open the next day red, you'll move back to the day's open. And if it finds support at the day's open, which so far today it did, you end up getting some kind of continuation. This is a very nice, healthy move back. The markets are push and pull. So here's your push, here's your pull, here's your push again. So if we can defend this, or if the market can defend 19,300 yesterday's open, we're going to hopefully see another pull, right? Another pull. Again, that's probably pointing, as we said yesterday, to the 22,500-ish area. That's where I'm going to look to take that hedge position. Pull this up. We got a ton of viewers. Right on. If you are here and you have not subscribed, please subscribe, guys. Please. I haven't had tunes on the whole time. I couldn't even tell. Please subscribe and like. If we get 420 likes, I'm going to gift out a bunch of memberships to the channel. So, I don't know. I just want to do that. I want to try it. So let's celebrate 420 together. We can do it. We have 800 viewers. We can get to 420 likes right now. We can do this early. I figured it would take a while through the episode, but we can do it for real right now. The more you like and subscribe, the more YouTube shows this stream to more eyes and our channel grows, and that's amazing, and I appreciate you guys. It looks like I missed some subscribers. Not really, just Tommy V. Tommy V, my man, the only person who subscribed while we're live. You're the man, handsome name. Obe has been a member for 3 months in a row. Those are the memberships that we're going to give away at 420 likes. There it is. Bitcoin, we were looking, yes, we were looking, and we do have what we had hoped for. So yesterday we were looking at this. We had a swing low in momentum on the daily. That momentum got sold into, started swinging back negative, and it caught again. On yesterday's close, we did see momentum pinch, and this is a good sign. This is a good sign, at least for some kind of relief or retracement, because this is, I love saying it, quoting Jason Casper, it's the uneven butt cheeks, and I got to give it to him. It's pretty damn consistent on Market Cypher. Market Cypher, great tool. Our sponsor. Check them out. Links in the chat. Use promo code CROWN, 15% off. No, Market Cypher, great tool. But I love this pattern he's identified because it really does. It has good probabilities most of the time. More than 50% of the time when you see this setup, you see price move in the other direction. So in this case, it would be up. But what I like is you can see it very early a lot of the time. This coupled with 3 lower highs on money flow, the daily does look kind of primed. What is up, Joe Chow? Number 2. Good to have you, Joe Chow. The daily is kind of primed. However, being primed doesn't get it past 22,500. It definitely can, but I don't have right now a technical kind of reason, kind of fundamental strength. I don't know, other than we're at historically oversold levels on Bitcoin. A relief rally to a higher number would make sense. But this is where I'm going to aim my sights. 22,500, period. The daily rolling over 20 totally on money flow. So if we see this money flow go all the way to zero and go positive, that's when we likely see those deep 618 retracements, maybe 37, 46, something around those numbers. We're not there yet. One day at a time. Certainly on a break of the 200 weekly, we can start getting more excited. But I like what I'm seeing on the daily time frame, at least with 19.3 holding. Whew, I had like a ramen earlier. It's sitting weird with me. Weekly still looks like crap. Weekly still looks like crap, but we have 5 days to go. We do not have a test yet of 20,600. That's why we're looking for like 20,008 to add on to the short. And that is just the order block from the previous weekly. And to see price action move up there, even if it sells back down, very normal for crypto. Very normal. So here we are. Not a ton has changed for Bitcoin since yesterday. So let's keep going. We're going to get through all these altcoins. Ethereum's up next, and we have XRP, DOGE, ADA, Sol, Sand, EOS, ICP, BRISE. We're not going to spend as much time on them because, in general, crypto is just going to follow Bitcoin. If Bitcoin rockets all of a sudden, all of those coins are going to go up in dollar value. If Bitcoin dumps down to 13K today, all those coins are going to go down in value. So it's not worth looking into them with the same detail. But we're still going to look at them. We're going to see if they're respecting their macro supports, their macro resistances, if we can see any kind of trading edge there. I'm going to throw in the chat the Discord link and the Twitch link. Follow me on Twitch if you're not. Or on Twitch. Follow me on Twitter if you're not. And jump in the Discord. After the live streams, we do airdrops of some free Satoshis. So you'll get a little bit of something just being in there. So let's jump to Ethereum. With no lines or charts on Ethereum, just the daily candles here. Again, looks very much like Bitcoin, as I was just saying. They're really just following Bitcoin, looking for some kind of direction, which it has not given them yet. Ethereum closed yesterday with a strong green candle, 7% gain. Really similar situation to Bitcoin. We're seeing we're seeing those gains be retraced in today's candle. However, what's nice here, and maybe for a smart person, there's a play. 1,072 for Ethereum was yesterday's daily open. Bitcoin has tapped its yesterday's daily open. Ethereum has not. So if we see some kind of selling volatility today, 1,072 might be a prime place to look for a scalp. I'm not saying it's a long-term position, but it might be a place to look for a little scalp. Betting on, okay, if Ethereum drops to 1,072 tomorrow, likely to move back up at least towards the 1,150 area, and that would just give it a very boring consolidation. Maybe price would just get tighter and tighter, something like that. Kind of as expected, we found resistance from 1,126 to 1,200. Yesterday's candle pushed into that today with a slightly higher high, but we're seeing sellers come in. This whole area for Ethereum, from 1,200 all the way down to 1,000, there are just levels on levels on levels on levels on levels of support and resistance. It doesn't favor either direction, but we do tend to see this at the macro pivot points. So for instance, last year, 2021 in the summer, when Bitcoin was down at around 32K, 28K, whatever, we saw a really similar pattern of these kind of daily or even weekly periods where it looks like it found some kind of support. We get a rally and it gets hammered. It does the same thing and it creates these order blocks. I love talking about order blocks. Order block. Order block. There's more. There's more probably, but I'm not going to find them. So when you see these kind of bearish engulfed candles after a little pop-up, like here's the best example, that creates an order block. That's an area of high liquidity that we do see market makers tend to go grab that liquidity. We see it here with the move up to 1,200, and we see it here with our move back down to that 1,100 range. Until we break really one of these two, Ethereum's likely, in my opinion, to just keep consolidating. You can call this a bear flag. I wouldn't call it a bear flag in crypto, but that's probably what typically people like that word, bear flag. I think it's because they understand what it means, maybe. Likely to play out like this until one of these trend lines are invalidated, either up to the top for a breakout or below the bottom for another dump. Not so much happening there yet. Not so much. Let's look at the day. Momentum up, just like Bitcoin on our MACD. RSI slowly recovering. Ethereum's market cipher on the day. I don't like this as much as Bitcoin, but it is still pretty similar. You can still call that kind of an uneven butt cheeks on both Ethereum and Bitcoin. VWAP trending up, pulling price up, or at least that's what we've seen historically. Let's look at the week. Weekly, potentially on its third week of losing momentum. I do want to caution everyone, or selling momentum. I do want to caution everyone. We also saw that happen back here in February. Momentum on the weekly was increasing on the sell side. It apexed right here at 2100. That selling began to wane. We see that with these dark bars. Price did bounce a little bit, but then inevitably fell again. So we're in a similar scenario. There is a few interesting things. One, MACD has not gotten lower on Ethereum yet. So if this does roll all the way over, we do have a bullish divergence on our MACD on the weekly. That wouldn't be a bad start. However, we don't have it on RSI, but what we do have, I'm guessing, is, yes, the lowest, most oversold Ethereum probably ever. This is true on Bitcoin right now with RSI and on the monthly, actually, with Bitcoin. And we're seeing that with Ethereum here as well. Ethereum touched all the way down to 26.46. That's extremely oversold. It is so oversold, and I mean, you don't need TA to even see that. Look at all these red weeks. It is so oversold that there has never been a selling event, at least on Coinbase. I don't want to go look back through the whole history, that has matched this. That is obvious here by 11, 12, whatever red candles we have, since the start of April. This is brutal. I really do think we see a retrace. At the top of the chat, I have our playlist with our TA shorts pinned, and Ethereum's on there with my upside targets here. I really do think we're going to see a retracement. I can't tell you because I don't know the future where that might be. 1700 looks pretty juicy. 1400 is going to be my very conservative guess, but there's potential, especially if we see some kind of shift in the Fed, even if it's temporary, for crypto to have a very nice retracement, and that would put it probably closer to the 2500 level. You can see there was virtually nothing here except for falling. We had support up here, and we had support at 1700, so those are logical backtest targets. We did not really backtest them, and when we have major supports, I can't say always, but the grand majority of the time, we see them tested as resistance on the way down. So Ethereum's not really doing much. I do want an alert on Ethereum. I think below 10,000. Oh no, where was our open? Hold on there, partner. I'm going to put an alert on Ethereum for yesterday's daily candle open. And that's going to be, yep, 1,072. Do I have alerts? I think I deleted a bunch. Sweet. Done. And I'm also going to place one right here at 1,173. So I know if that high is broken, it's unlikely to happen today. If it does, that could be extremely bullish. We're not there. So Ethereum, not too much change to yesterday. Looking pretty Ethereum-y, like pretty Vitalik-y. Let's go to XRP. XRP. ADA, or not ADA, XRP or Ripple. With no, why does my watermarks keep disappearing? With nothing on this chart, looking just at the weekly, pretty ugly like the rest of the market. However, the only line here, this is the current price. If we look back to 2019, heck, even back to 2017 and 18, we see that this area, this 30 to 33 cent area, very important to XRP. Huge consolidation. These are weekly candles. These aren't days. These aren't hours. These are weeks. Huge consolidation in 2018. It fell below 30 cents. It found resistance there over and over and over and over and over again. It finally was able to hold on to a higher low and broke through. But even after it broke through, it fell back below 30 cents, found resistance again. And here we are. Here we are. Right there at this major level. If XRP doesn't hold this level, I don't really know what will happen to it. Certainly, we can find support below 30 cents, but it is an absolute knife, in my opinion, if that's the case. This is the technical level. The chart, going by just technical analysis, no beliefs. I'm not a huge Ripple fan. I have like a few of them from a long time ago. I don't really care if this moves or not, but this is the level to bounce. If it doesn't bounce here, it is in big trouble. If we add our horizontals back to the chart and zoom in, we can see these weeklies. Nice. This weekly has not gone lower than last week's perfect touch to 30 cents, but the weekly candles are refusing to close below. We want to see that continue. Hopefully, did we get a day? Nope. If we go into the daily, this is actually even clearer. We see that these candles are seemingly frightened right here, right here, right here, even back here. As soon as they get close to 30 cents, they do seem to find buyers that's pushing the market higher. Now, the warning I have is there's 1, 2, 3, let's see, 4, 5, 6, 7 tests on the daily to this level. Remember, supports and resistances, the more they're tested, the weaker they become. So 30 cents right now is a saving grace. It's above there. That's awesome. But it is weakening each approach. So be very careful. I think XRP, there's a very logical stop loss trade to be made here. Man, is that chart ugly, though? It's ugly. But if it holds 30, it doesn't really matter how ugly it is, does it? Does it? Let's see what Market Cypher has to say. I like Market Cypher on it. Actually, I like this a good amount. Similar setup with your 1, 2, now potentially 3 lower highs on money flow. Momentum, much more visible than on, say, Ethereum or Bitcoin. This is bad here. It shows that as soon as bulls had an edge, they got sold into. But we're seeing that momentum cross again. So we could see something like this, where we have another high. This is going to drag money flow up. VWAP is positive. It's ugly, but it's positive. There's a setup here as long as 30 cents holds. Honestly, I think if you need to just know one thing about trading XRP right now, it's 30 cents. That's it. I think that's a good wrap. Let's go to the DOGE. To the DOGE. Let's zoom her out again. Zoom it out. One of the few charts you can have 6-month candle on. Doge, when you look at the rest of the market, has performed extremely well. Bitcoin is back below, right now, back below its 2017 high. Dogecoin's 2018 high. 2 cents. 2 cents. Currently trading at 6. So it blasted past its previous all-time high and is, at the moment at least, nowhere near back testing its previous all-time high. That shows you that Doge is not exactly moving with the rest of the market. Can Doge come back to 2 cents? Absolutely. Can it go lower? Absolutely. But if we look at every other chart in the space, almost nothing that existed in 2017 or 18 is as high or is as far away from its previous all-time high as Doge. Doge is performing. Like it or hate it, it's performing. Or it has been. Certainly in the last, 12 months now, these are 6-month candles, has not been an intelligent long. But that's why in trading, we act more like a hunter. We're patient. We wait for the market to come to us. And that's pretty much what we're doing. So let's throw our lines back on the chart. We see our large area of support, 0.009 to 2 cents. That's a large zone, but that's a much more comfortable place to look to take a position than randomly right here. Go to the week. That's not the week. 90-day chart. That looks weird. I haven't looked at that in a while. On to the week. Bullish engulf. We really have traded kind of sideways, it looks like, since yesterday. We're going to have to go down to the day to see anything new. Money flow looks good on. Money flow looks good. Okay. RSI is a little janky. Not too much on the day. Doge with a 3% gain yesterday, now down 3%, 3.6%. Pretty much sideways trading. Let's see what we were looking at yesterday, though. This is what we were looking at. 2 potential patterns. One, we have a descending channel, which will continue to drag Doge lower. Lower highs and lower lows. Eventually, we would expect that to break to the upside, but we don't know when. That is the first potential pattern. And the second potential pattern is still in play here. That's this blue triangle. This is very experimental at the moment. But what we're seeing is a previous support, 7.82 cents, was lost on Doge, back tested as resistance. Now, that is what we're waiting for Bitcoin, waiting kind of for Ethereum to do. Back tested the previous support as resistance. We're waiting for Bitcoin and Ethereum to do it, blah, blah. Doge sold back off, found support at the value we were talking about yesterday, 0.666 cents. So what we want to see here is higher lows, and then a retest of 7.8, whatever, 7 cents, 7.8 cents. We want to see that. We can have another one that is still a higher low. What we don't want to see is our low broken at just about 6 cents here. If that's the case, then we are very much more likely to be in that descending channel, which will spell for further pain, further downside. Let's see. We were looking basically at some not financial advice. These are just hypothetical trades. Short from 7-8 cents. Playing off of that flat top pattern potentially. Or long from 0.666 cents. And guess what? I believe it filled. There we go. There we go. We spoke of it yesterday. I think yesterday it was like more up here. It was like more here. But price did come right back to our entry at 0.666. I can't say it right. So it looks like the Doge play still alive for now. Interesting chart. You see anything different? No, that's about it. That's about it. Ideally for Doge and ideally for our long position, we do want to see today's price settle above our entry, which just so happens to be that support level. Currently trading slightly below it. So I'm going to set an alert. I'm going to set an alert right here. If this goes off, our Doge long got boned. If this goes off, we're geniuses. Perfect. Let's move it on. Cardano or ADA. Month still hanging out in red territory down to the week. Not a lot of changes from yesterday. Not a lot of changes. ADA acting very different in this market. In May, it set a low. It's failed to break that low since. Virtually every other chart that we've looked at, we've seen a low in May, and then we've seen that low break. ADA then trading sideways near 50 cents. Something I'm just seeing now that we might want to pay attention to going forward. 48.2 cents. This was the major weekly consolidation level here. We found support there over and over and over again. Last week, we closed a candle below it. This week's candle, well, it hasn't broken last week's low, which would be a bad sign. Doesn't look too hot. There is 5 days to go. Way too much time to count a close. But with that close last week below support, we're going to have to be a little more on our toes if we're trying to trade ADA. I'm going to set an alert for 43 cents. 43 cents. Huh. All right. Because with that weekly close below support, finally, that does suggest bears have gained some power over the Cardano market. If we see selling, the obvious target is May's low at 38.4 cents. However, because we've seen the rest of the market break this, I'm a little skeptical to really go long there. There's a major support at 34.1 cents. I think that's the smarter play. And again, the problem with Cardano, if you lose 34 cents, you really don't have significant support till 14, and that's no bueno. But not a lot of changes there. Just keep an eye on it. She's a moving. She's a moving somewhere. She's just going to break out up or down. Solana. Sol or Solana. We looked at this yesterday. It's pretty much just stuck in our support range. Not the prettiest of patterns. Solana having a similar issue to Cardano. You have potential support at 1972. But if you lose that, if we see a real market shakeout again, you don't have any. You really are just in free fall. You can argue maybe $10 or something, 12, there's a little bit. But in reality, $5 would be my target if 19 breaks. That's some big downside. We're looking at a potential long last stream from 32.85, our support. And we're just looking to play it back to the 618 retracement. So far, that longs up a little bit. Not really super exciting. Filled and almost got to our target. Not there. Sand. Okay, this one hasn't really moved either. Had a spicy day yesterday. It was our largest gainer, or second largest gainer yesterday. There we go. Was our second biggest gainer yesterday. Closed with a 15% candle. People were pretty hyped about it, and I cautioned everyone, please don't FOMO into this. You have a pretty significant resistance at $1.28 above you. Below you, you have supported $1. We've had some very solid respected TA on this chart so far. It's played well. I think it's going to follow kind of the setup here. If it breaks $1, I don't know where we go. I don't know where we go, man. 10 cents maybe, who knows. But if you can break above $1.28 and close, I'm looking for $1.80, a nice little retracement. 255 was not tested, could be a logical target. Not a lot of progress there. Money flow does look to be rolling over on the day, kind of similar to the rest of the market. One thing I do like, unlike Bitcoin, Sand did not move all the way down to yesterday's open. So you can see basically a little story of bulls bought up from the dollar mark. They bought price up to $1.21. The day ended, bears came in and they looked to take their profits back, but the bears have not yet, or have not, pushed price back down lower. So they may be losing some control here. Even just a small red candle close here today could set this up for a nice 3 candle long setup. We'll see what happens. Let's see. EOS. This was just one that for some reason showed up on Google Analytics, like people were searching for it. No one's talked about this coin in forever. And so I figured, why not take a fresh look at it? EOS is like one of the 2017 coins. It was never really one that I was interested in, but it has had a very bloody few years. As you can see, make this a little smaller. These are 6-month, half-year candles. Half-year candles on Binance, so this isn't the full history. Does Bittrex have it? Nope. We're going to stay on Binance. Maybe it is full history. You have major resistances above you. 236, 413, 580. But we're not even really at that point of talking about it. It's not even like worth talking about those yet. Our 6-month candle closed last month at 92.6 cents. So this is going to be the level to be weary of. We don't want to lose 92.6. It's swing low at 81. That was an all-time low. It hit an all-time low last month. Okay. Well, according to Binance, there might be more history. Could be a play. I'm not going to take it, but there could be a play absolutely. Looking to stop under 81.5 cents. I just don't see a reason. I don't see a reason. Maybe if all the other 2017 coins start popping, maybe. I just don't. Maybe you guys know about EOS. Maybe there's something going on I don't know about. That's very possible that there is, and people are interested in it because of that. I don't know what it is. Share it in chat if you know. I don't know. Money flow looks like crap. Market Cipher does not like this on the weekly. RSI is at its lowest level on the weekly, but so is price. So that isn't a bullish divergence. That's not really ideal. Not really ideal. Wow, this thing's brutal. Brutal, dude. Like, look at all the way back here, your previous bear market low. Or no, this isn't previous bear market. This is March 2020. On the March 2020 crash, this went to $1.35. A few days ago, it went to 81 cents. That's huge. That's definitely going to be a very important macro level. It's good, or at least confidence building to see this bear flag paint out right there as those orders, that liquidity was absorbed at that macro level. Man, this has a long way to go. This has a long way to go. I don't know, if you have EOS, if you entered a position randomly, if you caught a knife, I might look to get out at $1.35. It's not a huge gain. All I see is resistance, though. Like, you have move down, then you have a momentum leg. Then you have a move down, you have a momentum leg. Then you have a move down, and you don't even get a momentum leg. You get like a bear flag. Then you have a move down, and now you might be bear flagging again. Like, this chart looks very miserable. Hopefully there's some kind of bullish news where people are just randomly Googling the letters EOS has nothing to do with crypto. I don't know. Don't know. I guess for short-term action, you could look to take a position from 92.6 cents, the quarterly or 3-month quarterly and half-year close. I wouldn't hold on to it past like $1.35. That's just my own taste. You look like on the daily you have some pretty significant resistance at $1. I don't know. This chart does not look good to me. Feel free to disagree. It does not look good to me. Let's move on to ICP. This is ICP, Insane Clown Posse coin. No, Internet Computer or something. This is some VC-backed coin that I don't like. It left a bad taste in my mouth from day one. But started trading on Coinbase at $630. This is why alts are risky. Started trading on Coinbase, $630. Hit a low last month of $4.50. That's a 99.27% drop over a year and a half. If you had $630 the first day, you now have $5. Savage. The quarterlies look virtually not different at all. It has only red 6-month candles, only red quarterly candles. That's like almost unique. Down to the month, we do have, in its existence, 3 green monthly candles. And I guess technically the one we're on now. This is such crap. This coin is such crap. Sorry if you love ICP, you're welcome to. But wow. Rest in peace if you people who put money in this when it came out. That dude, there's just nothing. Like ICP, all right, like here's some macro levels, right? Mostly resistances, maybe. It's not even really support at 460, but here's your macro levels. Here's what's happening. ICP is in complete price discovery to the downside. That means it doesn't have support. It's just a knife. It's as knife as it comes. Wouldn't surprise me to see this get delisted if this continues. But this is just a knife. It doesn't have a bottom. It will randomly find a bottom. Charts probably aren't going to help us do that. Personally, I'm just going to stay away from this. You guys are welcome to do whatever you'd like. I mean, you know, I can say the same thing I say about most coins is like, oh, we'll expect like a retrace. And that retrace would bring it, you know, very high, like 96 to the golden pocket. That's a huge gain. I just don't see it with this. VC, pre-mine, just not decentralized coin. The only reason this is going to go up is if those VCs who were in it start buying it again. We'll see if that happens. BRISE. BRISE. I don't know what BRISE is, but it was also trending on Google Analytics. So not a lot of history here. Literally, we have 4 points when we look at the 6-month, and that's its all-time high, its all-time low, the 6-month open, and the 6-month close. Let's go to the 3. Quarterly, okay, so it's just the quarterly, exact same thing. Quarterly did open at 3915. That could be support. Not a very confident support. You don't have a lot of chart history. 2600, possible. Also could be support. Not a lot of confidence. There's not a lot of history. Monthly giving us at least one more value here at 10,007. This chart is actually very boring. Wonder why people are searching it. You fell. You're consolidating. Bullish engulfed, failed to bearish engulf. This is what it's looking like to me. Something like this. Let's see how this plays out as I zoom in. On the week, we're not going to get anything from indicators. There's not enough data. On the day, okay. Actually, on the day, there's something. There's something on the day. I inverted the chart, so it's upside down. We may have a neckline. And we may have a right shoulder. So what would we need? We need a rejection from that little trend line that we drew. A break of the neckline, and then maybe you have an inverse head and shoulders. Maybe. I think right now I wouldn't touch it. Yeah, I think right now I wouldn't touch this thing. But if BRISE follows the TA, moves up, makes a new high, falls down from that high, and lands on 4,800, that could be a very strong entry. That is a virtually perfect inverse head and shoulders if we can break the neckline and get a back test. So that's where I'm going to be looking. I'll put an alert because this is spicy. Very spicy. Or you can play it the opposite way and look to just go short at 48. Whatever you're feeling. I like this just because of this little inverse head and shoulders pattern, but I don't know anything about this coin. I would be weary of it, especially with whatever gibberish wick this is. I wish there was a way on TradingView to just delete a candle from like your chart. Like if I could just delete this one. Like what is this? What I like here, we're on the hourly for Bitcoin. I like how we had a descending low trend meet an ascending low trend meet a descending high trend. And that goes all the way back to like 69K. We saw them meet or converge, and price didn't just fall through them. There's nothing that says price needs to or should do that, but in Bitcoin and crypto specifically, I have noticed that happens a lot. That happened when we broke back here. You can do it quick. That happened when we broke back here. I'm pretty sure. If we do it this way. There's that. Was it this one? There it is. Boom. Actually, pretty proud of myself for finding that. My memory still got it, baby. It's not a rule, and there's nothing like in technical analysis, at least that I'm aware of, that points out anything like this. But in crypto, for whatever reason, I have found that to be the case. When you have a major high trend and a major low trend, price does tend to push through them. I don't know why. I have no idea why. But you can see this is like literally, what, 1 day off? And we had both of these trend lines from February 2022. We didn't fall until May. So months in advance. We didn't know necessarily that it would fall through. I mean, of course, price could have done like this, gone through, like up through it. But in the future, I think we should apply that to our TA. If price is above one of these major convergences of trends, we might keep an eye out for it to fall through. If price falls below, we might keep an eye out to see if price will rally through it. Nice little lesson, but that one's perfect. That one's perfect. So I am glad that that didn't happen here. That's my starter. I guess what I kind of like about this as well, do that earlier. This is technically like a bear flag. It is kind of like a bear flag. Let me see. I have a few ideas. I'm not denying it being a bear flag, but I have a few ideas here. So we have like this bigger wedge bear flag structure, okay? That could be one way we look at it. At first, we were looking at it this way because we had a flat top, but our low broke. Our low broke, that took away our bullish pattern that we were looking for. So the thing I don't like is when you break this ascending low and you return what is like essentially the bottom of a channel, you may be in distribution now. So what distribution would probably look like is something like this. Something where you fall to the bottom of the channel, you break some highs or whatever, but you don't get, I guess you don't break highs. Maybe that's what, yeah, that's probably what actually describes it. You don't break highs, you set lower highs, and eventually you fall out of it. So I am worried about this being a distribution zone. Worried meaning, I don't know. I don't like when price goes down. I'm not actually scared. If price goes down, I think we're going 17.2, possibly 13.8. But I don't like that it's starting to look like distribution. And so what I'd like to see to kind of remove that fear would be a move, or at least to test back to the highs. If we get back to the highs, we can still pull some kind of SOS pattern and break to the upside.